Have you ever thought, I wish someone had taught me how to manage money when I was younger? That's why today, I'm going to share 10 essential personal finance tips for young adults. These are tips I wish someone had told me back then, and I hope they can help you avoid some of the struggles I went through. Let's dive in. Start budgeting early. Here's the thing. If we don't know where our money is going, it's easy to overspend without even realizing it. I used to think budgeting was restrictive, but actually, it's empowering. We get to control where our money goes. Start by tracking your income and expenses. Every single dollar. A simple budget can be as easy as the 50-30-20 rule. 50% of your income goes to needs, 30% to debt repayment or savings, and 20% to wants. It doesn't need to be perfect, but just having a plan will already set you ahead. Build an emergency fund. Life happens. Our car breaks down, we lose our jobs, or we have unexpected medical expenses. If we don't have an emergency fund, every financial hiccup will feel like a crisis. You don't need to start with a huge amount, but aim to set aside 3 to 6 months worth of living expenses, and further extend to 9 to 12 months when you can afford. Even if you can only save $20 a week, it adds up. Your future self will thank you for having that cushion. Pay off high interest debt first. Debt is one of those things that can sneak up on us, and before we know it, it's weighing us down. When we have credit card debt, we all learn the hard way how quickly the interest piles up. Focus on paying off high interest debt, like credit cards, as soon as you can. Try the snowball or avalanche method. The snowball method focuses on paying off your smallest debts first to build momentum, while the avalanche method targets the highest interest rates. Both work. It just depends on what motivates you more. Invest in yourself early. I can't stress this enough. The earlier we start investing, the more time our money has to grow. Compound interest is our best friend, and the earlier we start, the better. You don't need a lot of money to begin. Even investing small amounts in a simple index fund can set you up for the future. I started small, and looking back, I wish I had started even earlier. It's not about timing the market, it's about time in the market. Don't rely on just one income stream. We live in a time where side hustles are easier than ever to start. Back when I was getting started, I relied solely on my 9-to-5 job. And when I lost it, I was in trouble. Having multiple streams of income, whether it's freelancing, a side business, or even passive income, gives us financial stability and peace of mind. Plus, any extra income we generate can go towards saving or investing. Avoid lifestyle inflation. One of the biggest traps many people fall into is lifestyle inflation. When you start making more money, try to limit your increase in spend on clothes, eating out, and things you don't really need. Just because our income increases doesn't mean our expenses should. Try to keep your lifestyle modest as your income grows, and put that extra money towards your financial goals, like paying off debt or investing. Still remember the 50-30-20 rule? When our income increases, we can turn that into 50-40-10. The principle here is keep our wants low, while increase in our savings and investments. Learn about credit and use it wisely. Your credit score matters more than you might think. It affects everything from renting an apartment to getting a loan for a car or a house. People that don't understand how important good credit is will end up hurting themselves in the long run. To build credit, use credit cards wisely. Pay off your balance in full each month. Avoid maxing out your cards, and don't open too many at once. I've been following these practices for years now. Having good credit gives us better options and lower interest rates on loans. Live below our means. It sounds simple, but living below our means is one of the best habits we can develop. I used to think having more meant being happier, but the truth is, having less financial stress is where real peace comes from. Ask yourself, do I really need this? Before making purchases. You'd be surprised how many things we buy that we don't truly need. The less you spend, the more you save, and the more freedom you have in the future. Understand insurance basics. When I was younger, I didn't give much thought about insurance. But luckily, I purchased a policy early while I was still in college, and gradually added more when I started working. Having the right insurance can save us a lot of money in the long run. Health insurance, renter's insurance, car insurance. These are the kinds of things that can protect us from financial disaster. Mine certainly did. Do some research on what policies are right for you, and don't be afraid to ask questions. It's better to be prepared than caught off guard when something goes wrong. Set financial goals and automate our savings. This one is important. Set clear financial goals, whether it's saving for a house, paying off a debt, or building an emergency fund. Having goals helps us stay focused. One of the best ways to reach these goals is by automating our savings. Set up automatic transfers from your checking account to your savings or investment accounts each month. You don't even miss the money, but you'll watch your savings grow over time. I've done this for almost 20 years now. Trust me, automation is a game changer. I know it can feel overwhelming at first, but you don't have to do everything at once. Start small, pick 1 or 2 tips to focus on, and as you gain confidence, layer on more. Personal finance is a journey, and the earlier you start, the better off you'll be. I hope these tips help you as much as they've helped me. Here's a video that you might be interested in. See you around at Asset Tech.